Well, hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's a Wednesday morning. Cues are fairly okay from the global markets, but domestically, of course, we have been weighed down by jitters ahead of the June 4 election verdict. And of course, we managed to, break below that 22,300 level yesterday, but, that was reclaimed in the second half of the session, and, we just about ended higher, above that 22,300 mark. 22,232, that was the swing low yesterday. So that is one crucial level to watch out for. Aside of that, 22,200 becomes a very crucial level to watch out for on the downside. But of course, over the next 30 or 40 minutes, we'll be talking about a whole host of stocks that will be in focus, including Dr. Reddy's, including the likes of Pidilite, PB Fintech. Lots of earnings came out post-market hours yesterday, and we'll be discussing most of them. And we'll also be getting all your stock-related queries answered by our experts on the show. So if you have any queries, keep them coming in on our live feed on YouTube. We'll try and take them up. But before we move any further, let's take a look at the top headlines at this hour. Wall Street ends mixed, but the Dow clocks its longest winning streak since December. Asian markets trade mixed, with the Nikkei slipping over 1%. The GIFT Nifty is hinting at a very flat start for the Indian market. Crude prices ease, with Brent slipping below that $83 a barrel mark. Prices slip amid uncertainty over a ceasefire in Gaza. Dr. Reddy's fourth quarter revenue and margin miss estimates led by a fall in US as well as Russian sales versus expectations of growth. Meanwhile, PB Fintech reports second quarter of profit led by core online business performance. Among key earnings today, watch out for FY25 guidance as L&T reports its fourth quarter numbers today. Hero Moto is likely to deliver a margin expansion and a 20% jump in profit on a YOY basis. Also watch out for numbers from TVS Motor. And B2B online travel distribution platform TBO Tech's 1500 crore rupee IPO will open for subscription today. Also, Aadhar Housing Finance's 3000 crore rupee IPO will also open for subscription. Well, just about 10 minutes to go for market open. Let's take a look at some of the cues we're getting this morning. The Nifty spot, as I mentioned at the start of the show, closed just about a shade higher above that 22,300 mark. It was, of course, down 140 points, triple-digit cut, third day of losses on the index. Crucial levels to watch out for: on the upside, 20 DMA of 22,444 will be crucial to watch, and on the downside, 100 DMA of 21,958 will be a crucial level if we break below that 22,000 mark. India VIX, of course, has been on an upward trajectory. We've seen a 67% spike in the last 9 sessions. Yesterday as well, it was up 2.5%. It has, in fact, it ended above that crucial level of 17. So, India VIX index will be, critically watched out for. And the Nifty PSU Bank Index, it has slumped over 5% in the last 2 sessions. The Nifty Bank Index as well has not been able to hold on to that 49,000 mark. In fact, it's the weekly expiry of the Nifty Bank Index in the FNO series. We'll be watching out for that as well. Some bit of volatility could be expected given the fact that it's the weekly FNO expiry. Looking at the Nifty open interest, shed 3.8%, shed somewhere around 4.2 lakh shares. The Nifty May futures was trading at a premium of 79.30 points vis-a-vis 107.45 point premium. The Nifty Bank open interest was up 7% almost, added somewhere around 1.4 lakh shares. The Nifty PCR, dropped to 0.78 vis-a-vis 0.85 in the previous session. And if you look at the stocks in ban, PNB and Z Entertainment, these are the new entrants in ban, in the FNO ban, and still in ban, continues to remain in ban are stocks like SAIL, GMR Airports, Balrampur Chini, Aditya Birla Fashion, Biocon, as well as Vodafone Idea. FIs continue to sell in the Indian market, in the cash market. You have a third day of sell-off coming in from the FII community. 3,600 crore worth of shares were sold in the cash market, but DII buying support remains. So 2,300 crore worth of stocks were bought in the cash market by domestic investors. On that note, let me also bring on board Rajesh Palviya of Axis Securities, who's joining in this morning to share his thoughts on the index, on a lot of stocks, and of course also to get in or address all your stock related queries. Great to have you on the show, Rajesh. 22,232, that was the swing low in yesterday's session. Do you think there is a threat that 22,200 on the downside could be broken in today's session?
Good morning, Nandita. Yeah, so looking at the near-term structure, yes, so there is a possibility that yes, we may go down further towards 22,200. Even we may break that level also. The way the supply pressure is mounting in last couple of trading session, that clearly shows that the most of the call writers now writing their position at 22,400, 22,300 strike also. So that clearly shows some pressure is likely to be there in the coming trading session for Nifty, and possible down move we can see towards 22,200 to 22,150 kind of zone on the downside. So yes, in opening we have to see where we are opening. If we breaks below 22,280 kind of zone, then yes, possible down move can extend in today's session, and lower level can be there. So to play this down move, you can one can buy 22,300 put option that was closed at around 104 rupees. So we are projecting target for that put option around 150 to 160 kind of zone. Keep your stop loss at around 75. Looking at the broader market also, yes, there is a supply pressure in most of the sectors, and profit booking is taking place in most of the sectors where we have seen a smart run up in last couple of weeks. So looking at broader market also, some profit taking is likely to be there. Even on the bank Nifty also, we have broken the important support area of 48,500. So that's the major support area for the Nifty, but now we are trading below to those levels. So until the bank Nifty not able to regain above 48,500, 600 zone on closing basis, some supply pressure is likely to be there in bank Nifty also. And once we able to break below 48,100 mark on bank Nifty, then this down move can extend further, and lower target towards 47,900, 47,800 can be seen in next couple of trading sessions. So again, both indices are looking weak on the near term structure. Sell on rise is the strategy at this moment for trading point of view, but for medium term to long term perspective, again on the down move near to major support area towards 22,100 is again buying opportunity for those who wants to buy market for short to medium term perspective. So they can look for some opportunity in the market on the downside, but for trading point of view, some pressure would be there.
All right, expect some pressure in the near term, and sell on rise would be the near term strategy on the indices. But let's talk about stocks that will be in focus. The stock of the day for me would be Dr. Reddy's. Numbers have been anemic to say the least. Profit up 36%, revenue up 12.5%. Margins came in at 26.4% vis-a-vis 25.9%, although they are below expectations of 28%. Of course, there's been a drop in the US business on a quarter-on-quarter basis, and Russian business as well has not been all that well. India business, it has done pretty okay. The expectations weren't as high from the India business because of them divesting 9 non-core brands in the last in the first quarter of the last financial year. But India business has been a bit more steady if you compare it to US and Russian business. Jefferies has an underperform call on this particular stock. In fact, the target price at 5,010 rupees a share, and they believe that FY25 margin should remain under pressure. Pharma stocks, Rajesh, saw some bit of profit booking yesterday. Post earnings, how would you be playing a Dr. Reddy's on the charts?
So Nandita, looking at the near-term, short-term structure, some recovery was there in Dr. Reddy, and the way stock has moved up to 20-day, 50-day moving average, that clearly shows that if a stock manages to hold above 6,200 mark, then some buying action could be emerge in the stock prices. But if it slips below to 6,200 level, then this down move can extend further, and then on the lower side, target for the Dr. Reddy we can see towards 6,000, even 5,800 kind of zone also. So looking at the near term, short term structure, some supply pressure we can see in the stock. 6,000 is the next important support area that needs to be watched closely. If it slips below to those level, then furthermore pressure towards 5,900, 5,800 could be there in the Dr. Reddy prices.
All right, that's the view on Dr. Reddy's. Pidilite is another one that will be in focus. Numbers have come out post market hours yesterday. Revenue above estimates, but profit, was below estimate. Margins have come in higher, 19.9%. If you look at the stock performance over the last 1 month, it has seen a fair bit of selling pressure, but the 6-month charts have, shown good 18 to 20% kind of returns. Would you expect, more profit booking at these levels on a Pidilite, and should one look at buying this dip?
So if we look at the short to medium term structure, stock is moving in upsloping channel on daily chart. That clearly shows that there is a sustained buying action is taking place. But as we have seen, broader market is under profit taking mode. So yes, some pressure would be there in this stock also. And now stock is in this corrective move. Stock is approaching towards its 50-day moving average. So on the downside, we will wait to initiate buy. 2890, 2900 is the immediate support area on the downside. So I think some corrective move towards 2880, 2890 would be the attractive level to buy again in this decline. So I think wait for another 2-3% kind of corrective move, and then one can look to buy this stock, as near term short term structure is still on the bullish side for the stock.
All right, near-term structure still bullish on this stock, but talk about Voltas as well. There has been some bit of weakness in the EMP side of the business, and that has weighed in on the profit as well. 20% down for the profit when it comes to the profit for Voltas. How would you really trade this stock? Yesterday, it was under pressure. In fact, in the last 1 month, we have seen the stock giving negative returns. 6-month basis, a good 50-55% kind of gains. But in today's session particularly, would you expect 1200 levels to be taken out on this chart?
So Nandita, there is a supply pressure since last couple of trading sessions. The stock under pressure, and we have seen significant profit taking is happening. Even in the previous day, stock managed to give breakout of its upsloping trend line. So looking at the breakdown on the near term structure, we believe that furthermore supply pressure is likely to be there. Since stock is almost now trading near to 1300 kind of zone, if it's sustained below to 1300, then yes, there could be another round of supply pressure we can see in the stock prices, and possible down move we can see towards 1250, even 1240 kind of zone. So though stock has run up sharply in last couple of weeks, so some profit taking is happening in the stock. I think one should wait again dips towards 1250, 1260 kind of zone to revisit this stock in this decline. And if it's hold 1250, then one can try to buy some quantity in a staggered manner, because as of now for near term structures showing that some more supply we can see in the next couple of trading sessions.
All right, supply pressure to continue for Voltas. We'll talk about more stocks. Rajesh, hold that thought. We are just about looking at 20 seconds to go for the market open. Of course, it looks like it is going to be a weak start. In the pre-open, we've taken out yesterday's swing low of 22,232. Of course, the mid and small cap indices saw deeper cuts in the last session. We'll have to see whether or not the weakness continues in the broader market as well. The first ticks coming in, the Sensex is down somewhere around 200 points, and the Nifty 22,250, that level, below that level right now as we speak. 0.3% cut on the index. The broader end of the markets, 0.3% kind of a cut coming in on the Nifty mid cap index as well. Let's take a look at the Nifty small cap index. That index was down almost 2% yesterday. The BSE small cap index is marginally in the red, extending losses of course, and if you look at the advance decline ratio, it is in favor of advances, at least for now, on the NSE. It's almost evenly distributed, 1:1. We'll have to see whether or not we manage to sustain the kind of market breadth we are seeing at the current juncture. But let's take a look at the Nifty Bank Index. It's a weekly expiry on the Nifty Bank Index. Week 42,200 taken out. So 0.3% lower for the Nifty Bank Index. Let's take a look at the Realty Pack. That was hammered out of shape yesterday. 4% cut on the Realty Index yesterday. Today as well, almost 0.5% down for that index. The Nifty PSU Bank Index should come up next. 5% downtick in a matter of 2 sessions. Okay, we have seen some bit of buying emerge at lower levels then. The Nifty PSU Bank Index has snapped its string of losses, up 0.7%. So some support coming in when it comes to the Nifty PSU Bank Index. Let's take a look at the FMCG pack. Yesterday that was one pocket that was standing out on the back of good commentary from managements. Today some bit of cooling off there, 0.2% lower for the Nifty FMCG pack. Also want to see what IT is doing. That has come to the rescue for the market, in times when the Nifty has taken out crucial levels. We've seen IT stocks providing buying support and capping those losses on the index. So 0.6% lower for the IT pack as well. So all in all, a weak start, 100-point cut on the Nifty as we speak. 22,200 has been taken out. We are below that level. And if you look at some of the individual movers on the index, Dr. Reddy's, after an anemic show in the fourth quarter, that's the top Nifty loser, followed by L&T, which is expected to report its numbers today. FY25 guidance will be key to watch there. Apollo Hospitals among the losers. Asian Paints reports numbers this week ahead of numbers, 1% down for that stock. Tata Motors, Grasim, Ultratech Cement are some of the others which are under pressure. Few gainers, only a handful of gainers today. Maruti Suzuki happens to be one of them. That's the top Nifty gainer. Coal India, Reliance Industries has snapped its string of losses among the gainers today. Axis Bank, ITC, BPCL and ONGC are some of the other movers. Rajesh, looking at the open, 22,200 taken out. What should be one's FNO strategy for the day today?
I think in the beginning of show we have initiated 22,300 put options. I think we can again look for buying a put option only, because the way our market has broken 22,280 kind of zone, that clearly shows that if we sustain below to those level, I think during the day also, if any pullback action comes towards 22,300 kind of zone, that's again opportunity to go short in the market. Until the Nifty not crosses about 22,400 on Nifty spot, I think one should remain on the short side of trade, at least for trading point of view, for next couple of trading session towards this expiry, because that call writers are clearly showing that for this weekly expiry, 22,400 may act as a major supply zone for the Nifty at this moment. So I think we will wait for some pullback towards 22,250, 260 kind of zone for Nifty spot, and then again one can initiate to buy 22,250 put option around those level, and keep your stop losses around 22,320 to hold that put option. And on the downside again, we see that we may see again Nifty to fall further towards 22,150 kind of zone also.
All right. That's the FNO strategy recommended by Rajesh. But Rajesh, all these stocks, Voltas, Pidilite, reacting negatively to the numbers, and so is PB Fintech. PB Fintech reported a second straight quarter of profit. Numbers were good, led by its online business performance, but stock is down 5%. Would you expect this weakness to continue? Is it just a bout of profit booking that's extending on this particular counter?
So almost in this down move, stock is now negotiating with its 50-day moving average. That's placed at around 1175 kind of zone. So if it slips below to 1175, yes, there could be another round of supply pressure we can see in this stock, and possible down move can extend towards 1125 also. Even in this decline, stock has broke its upsloping channel support area. So near-term structure has turned a little bearish at this moment. 1175 is the critical level. One needs to watch that level closely. If it's break, then yes, possible down move can extend. On the higher side, 1220, 1230 are likely to act as a steep resistance for intraday trading perspective. So those who have already holding the position on cash segment, they can look to liquidate some position if it breaks below 1175.
Let's talk about some of these chemical stocks like SRF and Navin Fluorine. In fact, as I'm going through our live feed on YouTube, we have a query on SRF coming in from Rupak Mehta. Wants to know whether one should stay invested or exit and invest elsewhere. Numbers were pretty disappointing for SRF and Navin Fluorine as well. Some bit of color awaited on the management changes, which the company hasn't really given. So on these two stocks, SRF and Navin Fluorine, what's your call? And if somebody has a holding in SRF, should they continue or should they exit?
So I think most of the chemical stocks are still struggling to give any kind of rally. Whatever rally which we have seen in last couple of week, that has again meeting the supply pressure on higher side. The most of the stocks are behaving in the same manner. The SRF again going down from its multiple supply zone area of 2650. So that's the major resistance zone for the SRF on the higher side. Until the stock not crosses about 2650 level, it may remain under consolidation for some more time. Looking at the overall structure for the stock on the downside, 2300 is the important support area for this corrective move, which is taking place since last couple of trading session. So I think in dips, 2300 is the important support area. If it's hold those level, so again some pullback would be there. So if he has bought this stock for short to medium term perspective, he can hold on the position. As the longer term view for the stock is on the bullish side, but for near term some consolidation would be there. 2300 to 2650 could be the range for the stock for some couple of weeks. Once stock manages to give breakout about 2650, then yes, this really can extend towards 2800, 2900 also, but it may take some time. So if he has time to hold the stock for some more time, then he can hold on. Even on the decline, 2250, 2300 are the important level where he can look for some averaging out the stock, as stock is in consolidation. So this consolidation is giving opportunity to average out the stock in the decline. For Navin Fluorine, some up move is taking place. Looking at the near term structure, 3320 is the important level for Navin Fluorine. If it continues to hold about 3320, some possible up move we can see towards 3450 to 3500 also on the higher side. So if he is holding Navin Fluorine, keep your stop loss at 3320 to hold the position.
All right, very quickly, I want to get in your thought on a Concor. Rajesh, yesterday we had Morgan Stanley initiating coverage on Titagarh Rail, and we saw how it played out. The stock was up 6 to 7% yesterday. And today we have Morgan Stanley upgrading Concor to equal weight, and the target price has been raised to 1076. Now, railway stocks, of course, most of them have been multi-baggers, but we've seen, on and off bouts of correction, right? So, should one use this correction as a buying opportunity, if any, and is the risk reward looking favorable for something like a Concor at the current juncture?
Definitely, this dip should be used as a buying opportunity in Concor. Long-term structure is bullish, and stock is in uptrend across all time frame. The stock is making a higher top, higher bottom formation on daily, weekly time frame. So this correction should be used as a buying opportunity on the downside. In this correction, 990. 980 is the important support area. So I think this decline should be used as a buying opportunity. Keep your stop loss at around 960 to hold the position. And if you can hold the position for positional perspective, we believe that, yes, Concor may exhibit a good amount of rally in going forward, and possible upside target we can see towards 1070, even 1100 kind of zone also.
All right, that's the view on Concor. Use the dips as a buying opportunity. Hold that thought, Rajesh. We'll come back and take up all our stock-related queries that are being sent in by viewers. But let me also bring on board Nirav Karkera, who's the head of research at Fisdom, joining us this morning to share his thoughts on the markets as well as a whole host of sectors. Great to have you on the show as always, Nirav. First of all, what's happening in the market? We've seen the Nifty take out levels on the crucial levels on the downside, and even though we have positive global cues coming in, we've largely been ignoring those cues, and of course it's the election jitters that have been playing out in the market. Look at the volatility index for that matter, 67% uptick in the last 9 sessions itself. Do you expect markets to remain in a range as we head into that June 4 event?
So, like you rightly pointed out, the volatility has expanded over the past couple of trading sessions, but it is also notable to consider the fact that this is typically characteristic during election periods. In fact, we have seen it over the past several elections that during the 3-month period of the elections, the volatility indeed spikes, and for very obvious reasons there, right? So right now, as you said, some of the jitters are being drawn against the backdrop of the elections being underway, and concerns looming around the low turnout that we are witnessing. Also, there is a wait and watch approach adopted by many investors at this point in time. So we could this comes in conjunction with a very stellar bout of uptick that we have seen over the past couple of quarters. So this basically creates a perfect scenario for profit taking, and that is what we are seeing across various counters, right? So we expect most of this money to get back in once the dust settles around the elections, and once concerns stemming from lower turnout and probably ending towards expectations or concerns around results that could not be in line with a clear majority, right? So while political continuity is the consensus, the roadmap to it seems slightly concerning at this point. We expect the jitters to continue in the near term. There is no upside trigger on the domestic front as well, and even from the global front, like you said, there are a few positivities coming in, but at the same time it is greatly offset by concerns around persistent inflation in the West, and the US Fed still firming up on the interest rate, if not increasing, but at least being firm on the current stance. So there is not as much of an optimism that could really percolate and overpower the jitteriness that is being witnessed on the domestic front. So yeah, so we expect the next couple of trading sessions to be witnessing high volatility and have a very strong undertone of nervousness as well, at least for the next month or so.
All right, of course, volatile times, and it's expected to continue at least next month, but till about next month. But I want to talk about the FMCG pack. Of course, the commentary has been fairly, bullish from the managements, and it's come as music to the ears of the market, right? Because on one hand, premiumization was working well for FMCG firms, but now the commentary around rural demand recovery is fairly, positive, right? And would you say that after the recent underperformance, it's time to lap up FMCG shares, given the fact that FY25 is expected to be much better in terms of volume growth for most of these companies?
Right. So premiumization indeed has been playing out well. I'd say there's still a long way before it meets the targets that the management is expecting the strategy to deliver. But at the same time, a very important development is the fact where rural consumption has outpaced urban consumption. And the more intriguing thing about this is we haven't seen as much uptick on the rural side and the food segment as much as we have seen in the HPCs, home and personal care segments, right? So this is a soft indication of the fact that this could probably sustain for slightly longer. And in fact, the management commentary also indicates the rural demand uptick to continue through the remainder of FY25 as well. So this indeed comes as music to ears, especially considering that the biggest weight bearing down on FMCG stocks was the the rural demand that was not coming in since ages now. I feel most of us have almost grown old, while waiting for this rural demand to make a comeback. I believe it's anywhere between 15 to 17 months now that we have seen such numbers. So now that it is finally coming in, and there is a slight bit of conviction that this is not going to be just another flash in the pan moment for rural demand, and we see signs of this sustaining and volume growth to pick up. While there could be some pressure on the pricing front, we expect the volume growth that's expected to more than make up for it. So the FMCG pack looks well positioned at the moment. Of course, in the recent last couple of days, what we witnessed was exuberance, because we must continually watch and track how the numbers are actually flowing in through at least one more quarter before building greater conviction on the sustainability of the volume growth that we are expecting. But having said that, now from a risk-adjusted standpoint and a margin of safety standpoint, it seems prudent to slowly and gradually start nibbling into the FMCG pack once again. It is indeed showing signs of promise and revival.
All right, of course, showing signs of revival, rural demand, and that bodes well for the FMCG pack. But let's talk about, RBI's draft norms on project financing, right? It has come as a we've seen knee-jerk reaction in stocks like REC, PFC. In fact, even the PSU Bank Index had been, heading south, in the wake of those rules. But this morning I was reading a report by Macquarie. They've said that project finance heads believe that these RBI rules are quite onerous, and if implemented, banks will scale back project finance credit, and this could, of course, impact the recovery in capex cycle and recovery in project financing as well. But if at all these rules are implemented, would you say that PSU banks would be impacted much more vis-a-vis NBFCs, given the fact that NBFCs follow the Ind AS accounting standards?
So, a couple of things on this development. Of course, there was a knee-jerk reaction, and it is warranted as well, because this move is expected to increase the provisioning, in the books of the banks, and such provisioning would have a direct impact on the bottom lines and the margins of the banks. In the near term, it is trouble. However, structurally, the move is in favor towards a healthier banking and financing ecosystem. But in the near term, we could expect some bit of pressure on the PNLs of banks. So the RBI draft essentially tries to safeguard stakeholders' interest in banks as well, and the banking operations as well, by ensuring there is adequate provisioning. There are a series of other guidelines also, apart from the 5% provisioning. The finer print also talks about how the RBI has indeed offered banks 3 years of period to reach there, and it is a gradual step up towards reaching the 5%. Think it is not it is not immediate that it needs to happen. Second, this is there are also a few guardrails that have come into picture in terms of the highest degree of exposure that can be taken even when lending in consortium, and how the kind of provisioning that can actually step down as the project nears completion and the cash flow cycle starts kicking in. So it is not that the 5% provisioning is going to be throughout the tenure of the project. There is a provision to step down in line with progression of the projects, and as it reaches closer to repayment capabilities, the provision really drops. So I believe that the draft structurally is positive for the ecosystem. Of course, in the near term, it will have a negative impact on the PNL, but one must also take a closer look at the nuances of this. Surely, as you said, there is indeed a fear that while banks try and adjust to the new norms once it kicks in, it will try and cut back and scale back on project financing. This could lead to a longer runway in terms of the private capex cycle once again kicking in. Not just the private capex, but the general overall capex cycle also kicking in. So this tends to slow the the macros that revolve and is connected with the capex story. But apart from that, we believe banks and NBFCs in the longer run will only emerge stronger as their balance sheets get healthier and as the PNLs get healthier. One must understand that these are merely provisions, and provisions, the primary purpose of most such provisions is to de-risk the books to a greater extent. So I feel that must be taken into consideration while viewing this development.
All right, a couple of more questions. L&T will be reporting its numbers today. Improved construction activity and a swelling order book, especially on the overseas international order book front, is expected to lift profit and revenue. But margin recovery has been a problem for L&T, and analysts expect that margins will grow, but at a slower pace. Would you concur with that?
Yes, so the margins have been slightly under pressure for so long, and we believe this trajectory will continue for a little longer. In fact, we expect it to run through a couple of more quarters, if not more, such subdued margin environment. However, what is really promising is the order book that is really swelling, and like you said, the overseas order book, the international order book, especially on the power transmission, distribution, mobility, and hydrocarbon segment, especially from the GCC countries, is quite a sign of promise. We expect that this order pipeline will only increase going ahead as most GCC countries try and diversify their dependence on oil, and the demand for more such projects start rolling in favor of L&T. A key monitorable would be its ability to successfully execute the Saudi project, and there are a couple of deals in the pipeline from the GCC segment that could make it to the L&T books. So that could bode really well for L&T. The construction activity has been doing well. In fact, barring the last March month, the previous 2 months seem to be doing decently well in terms of completion of construction activities. Many such legacy projects are ending, are getting closer to completion. So, a key monitorable will also be the working capital cycle moving forward once these legacy projects are completed and newer projects are taken on. Working capital cycle will be a key monitorable, which will then finally percolate into other metrics of the P&L.
All right, that's the view on L&T. I'm afraid, Nirav, we are running out of time. I wish we could continue with the conversation, but we'll keep that for another day. But thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Always a pleasure.
It was a pleasure.
Well, with that, let's quickly go back to Rajesh then, who's waiting by very patiently. Rajesh, we have, pulled back from the day's low. In fact, the Nifty is just around that 22,250 mark, and the mid-cap index, attempting to get back into the green. But let's quickly take a look at some of the queries that are trickling in this morning. Bajaj Finance. That's one query that's coming in from Shweta and wants to know what to do with this particular stock. Haven't seen any bit of recovery in Bajaj Finance ever since it reported its numbers as well. Any particular level you'll be watching out for on the charts of Bajaj Finance on the downside?
So on the downside, the critical support area is placed at around 6,700. That's the critical level for the Bajaj Finance on the downside. If it breaks below 6,700, then yes, this down move can extend further, and then possible downside target we can see towards 6,500, even 6,400 also on the downside. Though on the higher side, 7,200 is the major supply zone at this moment. Stock attempted to view breakout above those level, but failed multiple time in last couple of months. So looking at the short to medium term structure, also stock is in broader consolidation range at this moment. 6,500 on the downside, and on the higher side 7,500. This is the broader range for the stock since last couple of months. So until the stock not able to take out above 7,500 zone, the trend is likely to remain under pressure only, as we have seen significant cut in last couple of months for the stock from its previous high. So our view is still on the bearish side for the Bajaj Finance. Sell on rise is the strategy until the stock not crosses above 7,500 kind of zone. On the downside, one can go aggressively short below 6,700 level. Then possible down move can extend, and we can see lower targets towards 6,400, even 6,200 also.
Right, that's the view on Bajaj Finance. Just want to go quickly, squeeze in as many queries as we can this morning. The next one is coming in from Ravinder, wants to know your thoughts on M&M Financial. Has been under pressure over the last 1 month. We've seen 15% being shaved off, and it's very close to its 52-week lows as well. So going forward, in the NBFC space, how is M&M Financial looking? More weakness ahead?
So stock is now trading near to its critical support area of 245, which is very critical support area. If we analyze on the monthly chart also, it's swing low of November 2023. If at all stocks breaks below 245, then this down move can extend further, and possible downside can extend towards 230, even 225 kind of zone also. So this is the 4th consecutive month where stock is under pressure. And looking at the near-term, short-term structure, stock is now trading below to their important moving averages. So view is on the bearish side for the stock until the stock not crosses about 275. Sell on rise is the strategy for M&M Financial.
All right, sell on rise for M&M Financial. Very quickly, a query on Britannia coming in from Yagnesh, wants to know whether it warrants an entry now, given the fact that we've seen these FMCG stocks regain momentum. What would you say?
Yeah, so Britannia one can look to buy at this moment. The way stock managed to be breakout on the weekly chart of falling channel, that clearly shows that yes, there could be a rally on the higher side, and possible upside we can see in near term towards 52.50. That's the immediate level on the higher side. If it crosses 52.50, then this rally can extend towards 5400 level also. So in this volatile market, some buying interest is emerging in most of the defensive pack like FMCG. So I think Britannia is one of the stock where some buying interest is taking place. So he can hold on the position with stop loss of 5100, upside target 5250 followed by 5400.
All right, that's the view on Britannia. Last query for the day coming in from Satya CK wants to know your thoughts on some of the pharma stocks. He wants to know whether Gland is a better bet for an investment with a time horizon of 1 to 2 years, or should he look at Wokhard? And he wants to know what levels he can enter.
So if we compare with both the stocks, I think I would go with the Wokhard. That structure is looking promising, and the way stock is holding the ground at a higher level, and stock is holding above its 100-day moving average support area. We believe that if Wokhard hold above for 520, 510 kind of level, then there could be another round of buying interest could be emerge in this stock. And once the stock crosses above 580, 590 kind of zone, then this rally can extend towards 640, even 660 on the higher side. So Wokhard is looking attractive on the technical structure. Gland is still in downtrend, and the major supply zone for the Gland is placed at around 2000. So that is still looks as a steep resistance for the stock. So I think Gland should be avoid. Wokhard he can invest at the current level also.
All right, I hope that answers your query, but this wraps up our query segment. Rajesh, before I let you go, what would you be recommending for our viewers this morning?
So I think there are some couple of stocks where we are seeing some traction. Britannia we have already discussed, and I think one can look to buy this stock. In this decline, I think one can buy Indigo also. That stock has also corrected from its recent swing high, and the way stock is holding the ground on the higher side, we believe that in next couple of trading session we could see another round of rally in the Indigo, and then possible upside for Indigo we can expect towards 141.50 to 4200 also. So one can buy Indigo with stop loss of 39.30. The another stock that we like is from real estate space, that is Oberoi Realty. Stock is showing a buying interest, and the way stock is consolidating in last couple of weeks, we believe that once Oberoi Realty manages to give breakout above 1500, 1510 kind of zone, then this rally can extend towards 1580 to 1600 also. So Oberoi Realty is also buy with stop loss of 1445.
All right, those are the recommendations coming in from Rajesh. With that, Rajesh, thanks a lot for taking out time and joining in this morning. Always a pleasure chatting with you.
Right.
Well, with that, we've come to the end of this edition of Opening Bell. Of course, 2 new IPOs opening up for subscription, TBO Tech as well as Aadhar Housing. Log on to moneycontrol.com to read analyst views as to which one you should be subscribing to and which one you should be avoiding. But looking at the markets, we have rebounded from the day's low. However, we are still below that 22,250 mark, and the mid-cap index just about managing to eke out very slim gains and rebounding from yesterday's 2% cut. But with that, thanks a lot for tuning in to Opening Bell. Of course, come back and join us at 3:30 p.m. At market close. But till then, have a great time and stay tuned to Money Control for all your other news and updates.